since they've already anticipated the feds to cut the rates,
well, now it became more affordable for you to go buy that second house. The feds lowering the rates can even affect jobs as well. So we may see some more action happening in the stock market because of this stuff. All right, guys, so the feds just cut the rates. If you've been watching the news, you're seeing it everywhere. The feds cut the rates, but what does that mean for you as a potential buyer, potential seller, or just a homeowner? We're gonna break that down for you in today's segment. Hey guys, my name's Enrique, PRG Real Estate Team Leader here at EXP. I'm here with my business partner and co-founder, Jason Palomino, who's also a licensed mortgage broker with Alliance Lending. And we're gonna break down really what the Fed rate means, right? What it means when they cut the rates. Because I think there's a lot of misconceptions about that, right? So Jason, really quick, what are some of the misconceptions that people have when they see the feds cut the rates?
People think it immediately affects the mortgage rates, right? Immediately, if they cut the rate by 0.5%, that now mortgage rates have been cut by 0.5%. Which that's not what's happening. So that's the main thing. I'm getting a lot of phone calls like, hey, the rates, they cut the rates by 0.5%. Does that mean my rate drops by 0.5%, right? And that's not true.
Okay, so what does it actually mean, right?
So no, I mean,
to keep it simple, right?
Yeah, to keep it simple, basically what's going to happen is, in regards to the mortgage side of it, right? In the mortgage side, now that they've lowered the rates, it's going to slowly affect the mortgage interest rates. Now, what we've seen though is that since they've already anticipated the feds to cut the rates, the mortgage rates have already built in that lower rate. Okay, and to be honestly, what happened was when they actually announced it, interest rates went up a little bit on mortgages the day of. Right. So what we're expecting now are for rates now to slowly trickle down because of the rate cut.
And in the past few weeks, they've actually dropped significantly.
Prior to the cut.
Even prior to the cut, right? Because they were already anticipating,
right?
And so a lot of the mortgage rates and like how the market and the economy responds, a lot of times it's by like what they anticipate that's going to happen, right? People get more conservative or more aggressive. And then it ends up affecting things, right? So give me an example of where the rates were before and where they're at now.
It's depending on which type of loan product you're looking at. Right now, we're looking at like a conventional loan. We're looking at rates like in the high 5s, low 6s.
Okay.
I would say before, maybe 3 weeks ago, you're looking more towards mid 6s to high 6s. So at least about 0.5%. Within the last month or so.
Okay.
Right.
And then in the last year, right? Like 6 months ago,
they
were even higher.
They're in the 7s. The rates are in the 7s on the mortgage side.
Okay. So 6 months to a year ago, they were in the 7s. Now we're looking at high 5s, low 6s.
Yes.
Right.
Yes.
And so that's a big change.
Definitely.
Especially in our area where home prices are $1 million, $1.5 million, right, and more. Is that 0.5% to 1%, depending on when you ran your scenario, that could make a huge difference in your payment or your purchasing power, right?
Definitely. Both in your payment and your purchasing power. And what we're telling our buyers right now, or people that are looking to purchase, and let's say they got pre-approved 6 months ago or a year ago, we're telling them, hey, meet with your mortgage broker, meet with your loan officer, so they can go ahead and run the numbers based on the current interest rates. And two things are going to happen, right? One, like you said, either you're going to qualify for more because rates are lower, or what you did qualify for, the monthly payment will be lower. So it's a great time as a consumer to go ahead and reevaluate what your purchasing power is.
Yeah, because you could take advantage of it both ways, right? You could say, hey, if I was comfortable with a $5,000 payment, I'm just throwing a round number out there. Prior to this, I was only qualifying for $800,000, right? But now if I want to keep that same payment on a lower rate, now I can maybe qualify for $1 million or something, right? It's going to make a difference right?
It'll make a difference. And again, that's why each case, each situation is unique, right? There's different types of loan programs. We have FHA, VA type of loan programs where some of those FHA loans, I mean, we're in the high 4s.
Wow.
Right?
High 4%.
High 4% where, with FHA, you
like
can
a first-time buyer,
first-time home buyer, you can put as little as 3.5% down.
Wow.
You can basically purchase a property for $1.2 million and bring in about $51,000, right? To go ahead and purchase.
So $1.2 million house, about $50,000 in down payment.
Yes.
And then that's not even counting like if you're negotiating closing cost credits through the deal, which we're seeing a lot of that happen. And so it becomes now a lot more accessible for people to buy right, with these lower interest rates.
Yeah.
Right?
Yeah, definitely.
But like Jason's saying, you got to get in touch with your loan officer.
Definitely.
You can reach out to one of us, and I'll get you in touch with Jason and our mortgage team, and they can run those different scenarios. Now, if you're going to run a scenario for someone, what information do you need to know?
So basically what I need to know is going to be your income, what you're looking to allocate towards your down payment, roughly your credit score, your job history, and any assets you may have.
Got it.
Typically what I like to do is we have a quick conversation, 15, 20 minutes. I ask you some questions, qualifying questions, and then we can send you over a link. It's a secure link where you can go ahead and fill out the application and then upload your document.
Got it.
I have a saying that I tell a lot of my clients is that I need you to participate in the process, and the way you participate in the process is by filling out the application and uploading the documents, and then our team can go ahead and get you qualified and run different scenarios for you. I think that's the main thing, is that since we're a mortgage broker, it's not one size fit all. It's definitely, let's explore the options. Let's see if you need credits for closing costs. Let's see if your real estate agent can negotiate credits. The lender can also contribute towards your closing costs. So there's a lot of different ways to go ahead and assist homeowners or home buyers right now.
Got it. Okay. So I think what I'm getting from talking to you is that these federal funds rate cuts, right, that's what they're cutting, is the Fed fund, right? It's going to start trickling over into the mortgage rates little by little. It's already started to happen prior to them announcing the cut.
Yes.
And that is now creating more opportunity for buyers, right?
Yes, 100%.
Now, remember, a lot of times a buyer is also a seller, right? There's a lot of people out there who are going to sell their house to go buy another one. So if you're someone that's looking to sell, this also affects you as well, because if you're selling with the intent to buy another house, well, now it became more affordable for you to go buy that second house. And that's part of the problem that we've had in the last year or two with the inventory being so tight, because if someone had like an interest rate in the 3% that they got during COVID when the rates were extremely low, they don't want to sell their house, right, and go get into a 7% interest rate.
Exactly.
Because now it becomes unaffordable. But now that the rates are coming down, it's kind of bridging that gap, right? So even if you had a relatively low rate before, now you can get a rate in the 5s, right?
And purchase now. Purchase now. And if the rates drop, you can always refinance.
You can always refinance, right? So I think what I anticipate, right, because we talked about how this benefits buyers, but it's going to benefit sellers because now it creates more options for them.
Yeah.
And then...
And really quick, Enrique, on the seller side, it's important, if you're a listing agent, bring out a loan officer. Bring your loan officer with you to that listing appointment. Right, so because if they're selling, they're probably going to buy. Yeah. So why not have your loan officer with you at that listing appointment, and they can go ahead and run some loan scenarios right then and there, and that separates you from other listing agents. Yeah. Well, hey, listen, we're going to go over and let me show you how we're going to get you top dollar for your property. Yeah. And then let me also bring in my loan officer to show you how they can go ahead and get you the best financing possible.
Yeah, and that's what we usually do. Like when I meet with the seller, first thing I ask them is, hey, are you selling or are you trying to buy another house? Yeah. Right? And if you are, let me have you talk to my loan officer, because that needs to make sense as well, because it's going to be factored into this whole equation, whether you want to sell or not, right? Yeah. And so that's the common practice that we use, and what we can offer to anybody out there who's thinking of selling their home is let's get you all the information. Yeah. Let's get you all the numbers.
It's a big decision.
Because it's a big decision, right?
Big decision.
Let's let you know what to expect when you sell your home. Let's let you know what to expect when you're going to buy that new replacement property. Yeah. Let's also strategize on how to sell and buy at the same time. Yes. That's where also getting creative and working closely with the loan officer comes in place, right? Because in a competitive market, it's easy to sell, but then it's hard to buy, right? Yeah. And so you have to have some strategies in place to make those two kind of line up. Yeah. Now, just to expand a little bit on the Feds dropping the rates, because I always like to do my research, right? Because I want to be able to now, speak on this, and be educated. The federal funds rate, when they cut the rates, some of the things that immediately get affected that I've seen are car loans, right?
And credit cards.
Credit cards, right? Anything where you're borrowing credit in a credit card or in a car loan, those immediately went down because those are kind of directly tied to a lot of these federal funds rates. So I know me personally, I was looking to trade my car in and buy a different car, but I was advised not to because the rate that I had on my car was like a 3%.
Yeah.
and they were going to give me like an 8% on a new purchase, and it just wouldn't make sense, right?
Yeah, yeah.
So now I'm probably going to go talk to the dealer and see like, hey, what about now?
Yeah, what are your options now?
What are my options now? And see if it makes sense. And it's the same thing you're going to do if you're trying to buy or sell, right?
Exactly.
It's go talk to the dealer, go talk to your loan officer, right?
And it kind of leads into the next thing is that if you are a homeowner, right? If you currently own a home and you're looking to refinance, what should you do?
Yeah.
Right? So, what I'm telling my clients right now is let's go ahead and fill out the application. Let's get all your documents ready. And then once the rate reaches a place, if it's there right now, obviously you can refinance. But let's say you need the rate to drop a little lower so it makes sense for you to refinance. Well, get everything set up now so that your file is in. And once the rate drops, your loan officer, your mortgage broker can go in and lock you in that rate immediately.
Yeah.
You're not kind of scrambling trying to get your docs ready. You actually are already in line so that when the rate drops to a point where it makes sense for you, you can lock that.
That's a good strategy there. A couple other things to point out is I think the Fed's lowering the rates can even affect jobs as well.
Oh, yeah.
And that's what I was reading about is that when money becomes cheaper and it becomes more available and credit becomes more available, right? Like with business loans and stuff like that, then employers, want to go hire more. They want to expand, right? So that this could be good for the job market as well. Where I think it's going to have a negative effect is that a lot of times these rates are tied to like savings accounts.
Yeah.
Right? So if you have money like in higher yield savings accounts, now that the Fed's dropped the rates, those returns are going to get a little bit lower as well.
Yeah.
But what it will do is it might cause people to want to go invest more in the stock market because they're going to pull their money out of some of these lower return, right? And now they want to go put it in something that's going to perform more. So we may see some more action happening in the stock market because of this stuff, right?
Yeah.
And so I think what I want to leave you guys with is that it's the reason we want to make this video is because there's a lot of misconceptions out there, right? We're hearing it all left and right from friends, family, even agents in the industry. They don't know exactly what it means when the Feds drop the rates. They think it's just like mortgage rates are instantly lower.
Yeah.
Yes, it's going to have an indirect effect.
Yeah.
Yes, it's going that way. But I think most of all, it's a great sign for our economy.
Yeah.
Right? It's a great sign that the government is stepping in and trying to like boost the economy through these things, right?
Yeah.
And so I think we'll see it play out. I think it'll be great for buyers. It'll be great for sellers. It'll be great for our industry. And so if you guys have any questions out there on your specific situation, whether you want to buy, sell, refinance, purchase a home, we want to be a resource to you guys. Reach out to us wherever you're seeing this video, and we'll get you the right information, guys. Thank you.
Thanks, guys.